Good morning. Today is Monday, January 31st, 2011. This morning we're talking about the Egyptian eruption. Now, before I get into the news happening here in the global economy with the geopolitical events happening in Egypt, I just wanted to mention that now we're trying to do the blog earlier in the morning to get it out to you in time for the U.S. session, so that now this has become an actionable blog for you, and hopefully you can take some of the information you hear here to use as ideas for the trading day. So that's the intention here. So hopefully you find this format a little bit more helpful for you. So without further ado, we're going to talk about what's going on around the globe. And right now, the entire world is focused on Egypt. We can see that they've had a bit of an uprising there, but it seems to be more of a political uprising than anything violent or any sort of major attempt at a coup, if you will. Now, this created a lot of fear on Friday. We had markets selling off. We also had oil prices spiked way higher, over $4 a barrel on this news alone. Now, while Egypt isn't one of the largest or larger oil producers, all right, they do control the Suez Canal, which is one of the conduits for transporting oil. So the fear was that if they lose control in Egypt, that all of a sudden the Suez Canal, oil wouldn't be able to pass. It would create a supply shock, thereby causing the price of oil to go higher. Well, as of right now, that hasn't happened, and it appears as though what's going on in Egypt could be a sign of the times and things to come in the future. And that is, the way that demonstrations are organized, the way that people kind of get around, and news passes quickly throughout these areas. So, one of the other fears out there is the potential contagion from an event like this. Now, the Egyptian, this uprising, if you will, is gotten a lot of press, but what we haven't heard as much about is the one that took place in Tunisia, where the president actually had to flee the country. So, this could be, having a domino effect in the Middle East, which makes it a little bit more of a potential dangerous situation there, because we're not certain what you're going to get as far as who's leading the charge, who's going to take over, things of that nature. So you can see that oil was higher on Friday, but this morning, looking at the charts, okay, we have a little bit of a rebound there, back from some risk taking. So I just wanted to show you here. We were just looking at pound yen here. Looks like that's moved a little bit higher. I just want to give you some of the quick news. All right, overnight in Japan, industrial production figures came in better than expected, posting 3.1% gains versus 2.8% gains. All right, and then you can see here we also have the Kiwis week in New Zealand. Now, they had worse than expected trade balance figures. Their building permits figures were down, and import prices were up. So you can see the Kiwis down here. Other than that, though, it looks like there's some risk taking going on in the market with the Aussie higher. All right, we're coming back up, just back. See if we can retest the highs here around 99.80 from recent. It's about 50 pips away. All right, we've also got the Canadian dollar. Let's take a look at that. Canadian dollar, a little bit of a bounce back here. You can see how on Friday's move, the U.S. dollar strengthened against the loonie, even though we had oil prices moving higher. So there's definitely a trade in there. I think right now oil is going to probably lead the market, but right now there's that risk premium built into it. But should this turn around to be much ado about nothing, then we could see oil prices pull back. However, if we start to hear rumblings out of other countries that actually do produce more oil, then this could mean higher oil prices going forward. The initial reaction would be higher U.S. dollar, but the Canadian dollar could also benefit as well, as they are an oil-producing nation also. Then lastly, we've got Euro USD. So Euro's just bouncing back from what happened on Friday. However, the numbers in Europe aren't so hot this morning. Okay, we had German retail sales figures came in much worse than expected, posting negative 0.3% versus a 2% expected gain for the month of December. And then the year-over-year sales, they actually declined 1.3% versus an expected gain of 1.1%. So that's not looking so hot there in the Eurozone. All right, we also had a consumer price index estimate come in just a little bit hotter than expected at 2.4%. Now, later this morning, we're going to get Just take a look here at loonie versus yen. Okay, we're going to get the Canadian GDP figures. We're expecting a 0.3% gain for November. We'll have to see how that comes in. That's going to be 8:30 a.m. Eastern Standard Time. And then in the U.S., we also get some personal consumption figures at 8:30, as well as personal income and spending numbers. So those are going to be important figures to see what's going on here in the U.S. and how the economy is looking. But we really want to impress on you the idea that there's risk in the marketplace due to what's going on in Egypt. And so far, by all accounts, it hasn't been a violent sort of protest, and it hasn't turned into this huge melee. It's really just been sort of like a call to action, if you will. It kind of looks like it's like a 60s peace protest, except for it all happened very, very quickly, and I think it has to do with the technology of the time. So we're going to keep an eye on that. We're going to watch oil, and then we're going to watch the dollar. If we see any sort of appreciable risk in the market increase, then we should see some dollar and yen strength. So that's what I've got for today, folks. Wait for those 8:30 numbers on the Canadian GDP. Those should have an effect on the markets as well. So good trading to all today.